Will the dollar give us a pullback next week after struggling to get above 103.50? And what will that mean for pairs like the Euro USD, the dollar yen, the dollar Swiss franc, and also the Australian dollar? That's what we're talking about in today's weekly Forex forecast for the week ending January 26th, 2024. Hey everyone, my name is Justin Bennett with Daily Price Action, and let's go ahead and jump right into the action here with the DXY daily time frame. Okay, so these are all the same levels that we have looked at here for the past few weeks. And if you all have been following along, what you'll remember is that back here during this consolidation, I was cautiously bullish on the dollar. And the reason for that was this reclaim right here at 101.90. So we had these lows from back here in 2023, these lows as well. And we got the close above on January 2nd here this year. So that close above flipped this level back to support. And you can see here on this NFP Friday where we got the retest down here perfectly and the consolidation between these two levels. 102.60 was the level that the DXY had to break above in order to expose higher levels here. And you can see where we did get that close right here on this candle. All right, so it was the right move being bullish on the dollar here for the past week. However, the question now is, do we get a pullback now that the market is struggling to get above 103.50? And this 103.50 level is one I've talked about as well. It's not that obvious from the daily time frame. However, if you go to something like the 12-month, and this might be a little bit hard to see because of all these levels, because each one of these candles represents 12 months. So it's an entire year within each one of these candles. And what you'll notice here is going back to 2016, this is a critical area for the DXY. It has been for years. Okay, so we've got highs up here, we've got closing prices up here. So 103.50 is going to be a very strong resistance level for the DXY. And that's why I've been talking about it so much here over the past couple of weeks. Now, you can see where on the daily time frame, the market has, yet to get above this, right? So it's all about the daily close. And so far, we have not seen a daily close above 103.50. So the key now for the DXY is going to be to find support at potentially 103.10. So this is more of a minor level support level here for the dollar, but you can see that going back here, we've got these lows. Okay, so we've got lows through here, and we've also got some lows in this area and this high. Okay, so, this is going to be a minor support for the DXY. However, 102.60 is going to be the big support level that bulls now have to hold above. If we were to see the DXY trading below here on a daily closing basis over the coming weeks, then that would be bearish for the dollar. Okay, so just kind of looking around out there with how last week closed, I do think that there's a good chance that we see a pullback from the dollar. The question is how far? The question is, do we get the move down here, maybe a wick below, followed by continuation, or do we get that full retest down here at 102.60? As always, this will be a level by level market, meaning that if we get the close above 103.50, okay, a sustained break up here, that level flips to support. A sustained break below 103.10, this flips to resistance, this is support. And a sustained break below here flips that to resistance. All right, so you get the idea here. It's going to just be a level by level market, but I do think that you have to be a little bit cautious while the DXY is below 103.50 because the time to be bullish was back here, right? This is when we were getting cautiously bullish. However, while below 103.50, in my opinion, this is not the time to be bullish. It's all about timing. I'm still cautiously bullish overall, but like I've said recently, 103.50, 104.20, these highs back here, this is what the DXY has to get above this area up here in order to flip bullish in 2024. So next up, let's take a look here at the Euro USD. And it's no surprise that if we're looking at a potential pullback from the dollar, that we could get a rally for the euro. And this trend line right here is something I shared with VIP members last week, which if you do want to join us in the VIP group, see the link at the top of this video for 70% off lifetime access. So looking at the euro, we had the market holding below 108.88 last week. So this has been a pivot now for the euro going back here toward November. And you can see where we got the close below here on this candle. And for 2 sessions, this held as resistance. Now, the one thing that didn't happen, and again, I shared this with VIP members, is we didn't get a close below this trend line from back here in October. So this trend line may look invalid because of all of the wicks down here in this area. However, what you'll notice is that the euro never closed below this level. So we've got these 2 touches here, and then this price action through this area. Again, this looks invalid. However, the euro never closed below on this candle. All right, so we had wicks below, but it never closed below it. You've got this low through here, and now look what happened last week. Once again, the euro never closed below. All right, so as long as the DXY is below 103.50 and the euro is above this area here, then what I'm thinking is we get a rally up here to potentially fill in candles like this and potentially give us a full retest of 110. So one thing that I mentioned in previous videos is that if you'll notice back here, this is obviously our fake out up here. I don't have any reason to think any different of this because we had this level established right back here. We got the rally in late 2023. We got the close back below in 2024. So that makes this up here a fake out. All right, so nothing has changed there. However, one thing I've said recently is notice these two highs. These two highs didn't quite give us a full retest of these highs back here. Okay, so what I'm kind of thinking is if we see the dollar pull back this week and the euro can hold above this area on a daily closing basis, then there is that chance we get a move up here toward 110 to sweep these highs. Okay, so something like this, right? Sweep those highs, give us a full retest, and then potentially from there we get a sell-off. Now, this trend line will still be critical though on the way down on a daily closing basis. All right, now the alternative scenario to that is that we get the market breaking down below this. Okay, Friday's move was an anomaly, and we get the market breaking below this, and a sustained break below here on the daily time frame would of course flip this area to resistance and expose areas like 107.55. All right, next up we have the dollar yen, which if you saw last week's video, you know that this area down here at 144.80 was the support level that I mentioned. So this week here, this was a weekly close on this candle, this red candle, and you can see where it closed just above this key area. Okay, so what we were looking for was a move up here toward 146.50 and potentially 148.35, and we got both of those. Okay, so nice move here from the dollar yen following that weekly close above here that I mentioned in last week's video. Now for the week ahead, okay, we're looking at a new range up here between 146.50 and 148.35. So you can see that this pivot right back here, all right, very clean levels here on the daily time frame. This area up here is currently serving as resistance. So as long as the dollar yen is below this, there is that chance that we get a pullback down here into this consolidation down here around 146.50. Now from there, that's going to be a must hold level, right, where you need to see the market bounce from there. Otherwise, a sustained break below opens up lower levels. All right, so once again, level by level market. Now, if this market were to get above this area up here, okay, so a sustained break up here in this area on the daily time frame, then we're looking at levels like this one up here around 149.70 and potentially this macro level up there around 152. Okay, so again, like I've been saying throughout this video, I do think that while the DXY is below 103.50 and you've got pairs like this staying below this resistance area, then there is that chance that we get the pullback to start the new week. And that would be healthy for the dollar. We've seen some really big moves from the dollar here last week. So a pullback into value would be a constructive move for something like the dollar yen. But again, it's going to be critical to see it hold above areas like this down here. If it were to close back above, this becomes our fake out and we're looking at a move lower. All right, so level by level market, time to stay patient right now just because we got a nice move last week, but while the market's doing this, you have to be a little bit careful here, especially if you're bullish, because I do think there is that chance for a pullback. The only thing that would negate that, like I said, would be a sustained break above this area. All right, so next up, I want to discuss the dollar versus the Swiss franc. And this is one that I've talked about a few times here recently, where I was getting cautiously bullish back here in this area because of what the DXY was doing. And what I mentioned to you guys was that this low back here, these July lows, were going to be critical to have the market close above in order to make this down here a fake out and send the market higher. Okay, so, so far we've had a nice move. We've gotten that reclaim on both the daily and weekly charts. And from the daily, from this level that I've had drawn, it does look like, okay, well, the market closed above this key level. So that means that we're likely to get a shallow, retrace followed by continuation. However, here's where the weekly chart comes into play. Because if you look at the weekly, yes, this down here is a fake out. And I do think that this down here could push the market higher over the coming weeks up here toward levels like 89. However, if you look here at the weekly and these key levels, you could make the case that this entire area back here is resistance. So everything from this weekly low right here to the weekly closing price. And when you do that, what you'll notice is that the dollar versus the Swiss franc didn't quite break above this area. Remember, a lot of times these are areas and the market did not close above that. Okay, so looking at the weekly chart kind of changes things here. And with the DXY still below 103.50, I do think you have to be careful here with a potential pullback on the way. Okay, so this is not the time to be bullish on this market. If you caught an intraday break back here, like even this candle right here. So let me flip back here to linear. Okay, so this was the break right here. And you can see where this candle just barely broke above this descending channel. Okay, so if you caught an intraday breakthrough here based on my recent analysis, then that was a pretty nice move. Okay, but this up here, this is not the time to be getting bullish on this market just because it is coming into those lows. Okay, so maybe we get the pullback here. Now, one thing for this market is that this level, okay, this low down here, any pullback that materializes here is going to have to break back below this level. So that's going to be something to watch here. So 86.70 or so, that's going to be a level to watch where if we see a sustained break back below this, then I do think we're looking at a pullback, at least down here toward this consolidation, if not a full retest down here at this level. All right, so, possible pullback here while it's below levels like this up here around 86.80. But I do think, though, that over the coming weeks, regardless of whether we get a pullback or not and how far that pullback travels, I do think that with this fake out on the daily and weekly charts, as long as the market is above this area here, even if we get a pullback, I still think that we see higher here from the dollar Swiss franc. All right, so last up here, we have the Australian dollar, which I mentioned last week, and a potential fake out from the trend line that goes all the way back here toward 2022. So you can see that off of that high, we've got several highs along this trend line. And the idea here was that we had the sustained break back below. So this area up here was going to serve as resistance. Now, this is one of those cases where last week's close was too close to call, in my opinion. And furthermore, this is where too, you have to look at the daily and weekly charts, because here on the daily, you can see where this level is just above Friday's close. However, if you go to the weekly, right, and this is something that you'll find on all platforms, where, levels, especially wicks on the daily and weekly, can alter a little bit, especially when you're looking at the last few years, right? And they can change a little bit. So looking here at the weekly, you can make the case that this level is drawn, all the way down here, right? In which case, look where last week closed. It closed right at the line. And so it's just inconclusive right now for me to be able to sit here and call this and say, well, this is still, intact and something that I would look to short. It's just not. This is one of those cases where, I'm going to give the market time to see what happens here next week, right? If we get something like this, where let's say Monday, Tuesday, we get some consolidation and then we get a wick above and a close below, something like that, where we get like a bearish pin bar up here, sweep this candle a little bit and then we get a bearish signal, then that could be something that I would entertain as a short. But I am not going to short this blindly without seeing some type of reaction from this level, because again, that weekly chart was just too close to call. Now, the alternative here, if you want something even more conservative, would be to wait for the market to break below this level. Okay, because again, this is going to be support down here at 652. So if we were to see something like this consolidation through here, you would want to wait for a sustained break below this to open up those October lows. Okay, so this is just too close for me to call right now. This is a case where, again, I want to wait and let the market show me what's likely to happen next. All right, so bearish price action from this area could be interesting for a potential short, but if we get the close up here in this area, right, close up here, a sustained break back above this would negate this idea and expose some higher levels. All right, so not a whole lot to do here with Friday's close. If it had closed more convincing, then it would be a lot easier to look for shorts up here at 66. But as it is right now, it is too close to call. And so I'm just going to go ahead and stand aside and wait for the market to show me its hand. All right, that's it for this weekly Forex forecast. If you enjoyed the video, be sure to subscribe to the channel, click the bell icon for notifications. Don't forget to show your support, smash the like button, leave your comment below. Don't forget to claim your 70% off lifetime access to VIP. See the link in the description of this video. Have a great weekend, and I will talk to you again next week.